So here on my board, you can see that we have the division of top-down analysis. Top-down analysis in Forex is a method of evaluating the currency market by starting with the biggest economical picture and higher time frame, then narrowing your focus down to the smaller time frame. So that is it. You can see from this infographic, we start this M represent monthly time frame, and this W represent weekly time frame, then daily time frame, 4-hour time frame, 1 hour, 30 minutes, 15 minutes down to the place that you go for your entry, which is the 5-minute time frame. You can use the 15-minute time frame and the 5-minute time frame for your entry, right? So these are the places. But first, before you enter the trade, you have to start from the higher time frame, which is the essence of the whole top-down analysis. You understand? You have to know the bigger picture. You can see the arrow pushing towards the downside, meaning you have to start from the higher time frame down to the lower time frame, right? But then there are other factors you should put together to have a concrete bias. Even if you're on the higher time frame, what are you going to use as your bias? What are you going to use as your confirmation that, oh, the market could go up, the market could come down, or the market is going to range? So let's go to that. Let me show you what you can use. So in this tutorial, I will teach you another concept, which is the how to use candlestick formation to find your bias from the higher time frame. Please pardon me, let me correct this thing. This is higher time frame. This is higher time frame. So higher time frame, right? So we know that we should start our analysis from the higher time frame. But what are the type of candlestick, or what are other conferences that you can use as your confirmation to know that, okay, from the higher time frame the market could likely go up? So number one, we have the candlestick formation, which I'm going to discuss, and I'm going to equally discuss liquidity sweep as well. So but let's start from the candlestick. You understand? So look at the candlestick. These are the candlestick that we have, that you can use as your confirmation, right? We have different type of candlestick. Number one, we have the spinning top candlestick. You understand? The spinning top candlestick. The spinning top candlestick, the anatomy of the spinning top candlestick is a type of candle that have, let me zoom it closer so that you can see it very well. Is a type of candle that have a small body and longer upper wick and longer lower wick. You understand? They have a small body, right? They have a small body and longer upper wick. You understand? This is the upper wick and this is the lower wick. So the psychology behind this candlestick is that once this candlestick forms, it means the buyers and the seller are having a battle. You understand? So that is why the market ends like this. So if it is forming in a bullish trend, it shows that the market will likely go for the downtrend. You understand? And if it is forming in the downtrend, it shows that the market will likely turn towards the upside, because the battle is there between the seller, which have been pushing the market towards the downside, and the buyers, which want to take the market to the upside. So the moment you start seeing this type of candlestick, it shows that the preceding trend is now getting exhausted. You understand? So look at another candlestick that you can use as your confirmation again. We have this candle which is called the inverted hammer. You understand? Why is it inverted hammer? Of course, you know that the hammer have the head and the handle. In this case, this thing looks like a hammer and the head is pointing towards the downside. So that is why it is called the inverted hammer, right? You understand? That is why it is called the inverted hammer. So once this type of candle form in a supply zone, once this type of candle form in a supply zone, or in a demand zone rather, once it forms in a demand zone, it means that the market will likely push towards the upside and feed this massive wick left behind. You understand? So whenever you see this type of candle on a higher time frame, like the daily, weekly time frame and the monthly time frame, especially forming on a demand level, it shows that the market will likely push towards the upside. You understand? And likewise, the hanging man, which is the hammer itself, look at it. Look at the hanging man. This is what we refer to as the hanging man. So when the hanging man forms, especially on the supply zone, it means that the market will likely printing the next candle that will come up will start printing towards the downside. You understand? And so once this form on the higher time frame, like the monthly, the weekly, and the daily, it shows that the market will likely push towards the downside, right? You understand? And let me show another type of candlestick. Though this one have a big body, but it has a longer wick. You understand? This wick will be low, it will be lower wick or upper wick. You understand? In this case, you are seeing a candle that has a bigger um a bigger in this case you are seeing a candle that has a bigger upper wick, right? You understand? And a big body. So once this type of candle forms, guys, I'm trying to find my pen, but I couldn't see it at the moment. I don't know where this guy disappeared to, but all the same, we are good, we are good, we are good. So you can see we have a longer upper wick. So the analogy is that the psychology behind this candle is that the candle left a big wick above. So the next candle that will come up, since it ends as a bullish candle, the next candle that will come up will continue towards the opposite side and feed this wick. You can see it on the chart. Let me show you on the chart. This is Euro USD, right? Let me show you Euro USD, how to spot this type of candlestick in the market. So let's see it. So you can see this is the type of candlestick I talk about. It has a bigger body and equally have a bigger upper wick, forming in a major critical zone, which is this fair value gap. You know, this monthly fair value gap. So the market forms in this place. So this fair value gap is acting as the supply, as the demand now rather. So the market continue pushing towards the upside the moment this monthly candle closes, and it closes as the type of candle that have a bigger body and equally a longer upper wick. So the next candle continue filling it. So this is an explicit confirmation for you as a trader that you should not have a double mind. When you see this type of candlestick, you should go down to the lower time frame and start looking for opportunity to buy the market. You understand? So if you drill down to the lower time frame, which is the daily time frame, you understand? Which is the daily time frame, right? So this was the candle we marked. This was the zone we marked. You can see on the lower time frame, like the daily candle, it still support our analysis of going towards the upside, right? Because first we have a break of structure. You understand? We have a break of structure, and then before the major push happens, we have this type of candlestick again. In this case, it is now a spinning top. Is this momentum that brought the market towards the downside has what we call the spinning top at the end of the momentum. And what you see next, I told you about the spinning top, and when it is formed on the supply zone or on the demand zone, the market will likely to push towards the opposite direction, especially after a trend, and it falls at the end of that trend, the market will likely push towards the opposite direction. So you can effectively use this thing and know your bias from the higher time frame. I can go on and show you that this thing works. You understand? So you start from the higher time frame, drill down to the lower time frame, and you can always be good in the market because you will not be carried away by the fake signal and the manipulation in the lower time frame. So if you go further to the monthly time frame, look at what the market is doing on this current chart now. I may tell you that we have 5 days for this particular candle, which is the April candle to close. Believe me, if the market close like this, that we are having a liquidity above, we are having another liquidity above, and if the market eventually close like this type of candle, the next candle that will come up will likely push towards the upside. You understand? Will likely push towards the upside, which is the May candle. The May candle will push towards the upside to take out all this liquidity above. You understand? So guys, this thing works. And if you want to learn more from me, you can join my Telegram community in the link below. So peace out for now. Thank you. Have a nice day.